Heya Cryptozens, tonight's show. What happened to Terra Luna's Bitcoin backstop? It's 10 p.m. Pacific time. The date is May 15th, 2022. Welcome back to the Crypto Overnighter. I'm your host, Nick. The cover model for this podcast is Tex, and together we take a nightly look at the crypto, NFT, and metaverse space and the industry that surrounds it. So take a minute, go ahead and subscribe to the podcast now, because we're here at 10 p.m. every night to bring you the crypto news analysis that you need to start your day. And keep in mind, nothing in this show should ever be considered financial advice. So when I heard about it at the time, I thought the idea of the Luna Foundation Guard, or LFG, great abbreviation, LFG was buying a bunch of Bitcoin to act as kind of a backstop. That seemed like a pretty good idea to me. Because let's be honest, a lot of crypto is picking the coin that you think has the best chance of succeeding. People pick based on how confident they are in the money that they're putting in, that it will be there for them later on when they want to take it out. And a $1.5 billion parachute might boost a person's confidence a bit. So remember, they just bought that $1.5 billion. Now, I reported on it May 4th. Just a couple days later, Luna started its Black Swan event. Now, timing on that could lead people to believe that it was too little too late, or too late at least. Too late to prevent the collapse of Terra USD and too late to protect Luna. In traditional markets, there are formal structures in place for things like this. Do Kwon described it as, quote, a decentralized foreign exchange reserve. Well, the digital asset markets haven't matured to the point where they're prepared to hold on to a 4x reserve to prop up confidence behind a stablecoin. And that lack of confidence is what tore Terra USD apart. So they had their money, they had their resources. What they did not seem to have was a plan. And that plan was sorely needed because it was a bit of a conundrum, really. UST is an algorithmic stablecoin. In the words of a Terraform Labs spokesperson, it is, quote, not backed or collateralized by Bitcoin or any other asset. So it was a reserve for UST, but UST wasn't backed by it. Situations like this deserve a plan. More of a plan than trust the algorithm, anyway. Back in April, when they were just floating around the idea of a reserve, a number of analysts held forth on what could happen with this reserve that doesn't back anything. Jump Trading, they had a plan. And their plan demanded attention. You see, Jump Trading is Jump Crypto's parent company. And Jump Crypto invested heavily in the Luna Foundation Guard. Now, they suggested putting in a pool. And you could draw out money from that pool when UST hit a threshold, 98 cents. So when that threshold gets crossed, you could go to the guard and swap Bitcoin for UST or UST for Bitcoin. The theory is that this would create kind of a hard floor at 97 cents because traders knew that they could take a UST at 97 cents and trade it for 98 cents worth of Bitcoin. So that creates a pretty solid demand for UST at 97 cents. The theory being, nice hard floor, 97 cents. So here's the deal on that. Jump Trading's proposal assumes that there will be robust markets and lots of liquidity. They were trying to create perpetual demand and relying on arbitrage to balance out their coin. The fact is that backstop was never going to be successful because it meant that Luna could only absorb the deviation of UST. In a crunch, selling Luna for UST makes that situation worse. So Bitcoin might have provided enough confidence to keep things going if those systems had been in place. But instead of having plans, the guard scrambled. They were frantically looking for solutions, and in the midst of that, they offered some $1.5 billion in cryptocurrency loans, hoping to secure enough capital to repeg UST. Later, they were reportedly scrambling to line up capital to back up the project. Before UST lost its peg, LFG had accumulated more than $3 billion in reserves, most of it in Bitcoin. However, it seems like they were just acquiring reserves just to say that they had done so. Well, their plan fell apart because they didn't get the reserve connected to the blockchain. the smart contract to use the reserves to stabilize UST, that smart contract was weeks away. Jose Macedo is a council member of the Luna Foundation Guard. Now, according to him, the Bitcoin swap mechanism was expected by the end of next week. Astroport is an exchange built on the Terra blockchain. Astroport was planning on being the ones to deliver that solution. Vetle Lund is an analyst at the Norwegian crypto research firm Arcane Research, and she said, quote, "The reserves had reached its desired size, but the infrastructure to utilize the reserves was not in place. Add a bleeding market and poor weekend liquidity to the mix, and you've got yourself a great opportunity to attack." Felix Hartman is the head of Hartman Capital, a Florida hedge fund. He said, quote, "To me, the LFG reserve is something between an insurance policy and a backstop of last resort. It is a psychological backstop, similar to FDIC, to comfort people that this, in fact, is not a house of cards." Let's take a look at the markets. At the time of writing, the global crypto market cap is $1.33 trillion. It was $1.29 trillion yesterday, so headed in the right direction. It's up 3.82% in 24. The top 5 cryptos by market cap are Bitcoin up 3.46%, Ethereum up 4%, Tether, USDC, and Binance Coin up 5.53%. The global NFT market cap is up over 10.63 billion. Sales volume is down slightly. It's down 0.8% in 24. According to CoinMarketCap, the top 5 NFT collections by sales volume are CryptoPunks, followed by Otherdeed, Bored Apes, Mutant Apes, and Azuki. Now, keep in mind, some of these collections have very volatile prices, so do your own research. So, $3.5 billion. That's a lot of scratch. Where did it go? What we do know is that this $3.5 billion in Bitcoin was created to protect and defend Terra USD. So while we know it didn't work, and while we know that billions of dollars in value and wealth just evaporated, that value evaporated because of a lack of confidence that it would prop up the UST stablecoin. That evaporated because there was no system in place to deploy it. So it didn't save Luna, and they had no plan for deploying it as a reserve. So where did it go? On May 13th, Do Kwon took to Twitter, and he started a thread to his 850,000 followers. And in that thread, he said a lot of things. He said he was sorry. He said he was heartbroken over what happened. Frankly, that's the most contrite I've ever heard him. He said he still believes in decentralized economies. He said he didn't profit from the incident. He claims to have sold no Luna. He also talked about the way forward and the need to preserve the Luna community. Now, in that thread, he didn't say what happened to all that Bitcoin. He said that they were working on documenting what happened. Tom Robinson is a co-founder and is the chief scientist of Elliptic. Elliptic is a blockchain analytics firm. According to Robinson, the location of that Bitcoin is going to be important. There are investors who want to be paid back. Even though Terra hasn't released the fate of all that Bitcoin, Elliptic has been looking into the question. Now, when the value of UST depegged, the Luna Foundation Guard said that they were going to dispose of Bitcoin to buy UST. Presumably, they didn't care what the real value was. They were just wanting to prop it back up to the peg. On May 9th, it was announced that LFG was going to loan out $750 million worth of Bitcoin to trading firms. Do Kwon later clarified that the Bitcoin was going to be there to be used to trade. And so it came to pass that some 22,000 Bitcoin were sent from a Bitcoin address that belongs to the Guard. That Bitcoin was sent to a new address. Now, 22,000 Bitcoin at the time was about $750 million, the amount that the Guard was planning on loaning out. Later on, another 30,000 Bitcoin was sent from other Guard wallets to this same address. A few hours later, that 52,189 Bitcoin was sent to a single account at the Gemini exchange, and they used several Bitcoin transactions to accomplish that. So the theory was that this Bitcoin would be used to prop up the price of UST. That's why it got sent to the exchange. Now, once it gets to the exchange, you can't just count on using the blockchain to figure out where it went. There's no way to tell if they sold that Bitcoin to support the UST's price. So that left 28,000 Bitcoin in Terra's reserves. They didn't stay there long, because they took that 28,000 Bitcoin and they sent it to an account at Binance in a single transaction. And like the situation with Gemini, there's no way to tell if they sold Bitcoin or moved it somewhere else. Because that's the thing. At this point, you can only see that the Bitcoin went into those exchanges and nothing else. Robinson said, quote, "All we can see is going into these exchanges. We can't really see how it's been used. It might have been sold. It might have been stored on the exchanges. It might have been withdrawn again. It might even be in an unhosted wallet. I wonder if people are going to start being brought up on charges, because that is a god-awful amount of money to just go missing. I can't imagine people are going to forget it exists." And that's going to do it for us tonight. Thank you so much for joining us. I really appreciate it. If you enjoyed tonight's show, then like, comment, and subscribe. Give us a glowing review. Do you have questions or comments? Reach out and let us know. The address is nick@cryptoovernighter.com. That's nick@cryptoovernighter.com. Oh, and check out my other podcast, Crypto in 5 Minutes. We have 41 educational podcasts, 5 minutes to explain one concept in crypto. And as always, may peace